Hello, my dear students. Welcome to my channel. Today we are going to see September 25 CA Foundation question number 2B. Pause the journal entries to record or rectify the following transactions. So you have to read the question very carefully. They have asked you to either record or rectify the following transaction. So there may be entries that you have only to record, and some entries may be there to rectify. And in case of suspense account is required, it can be used. Okay, so the first item is sale of goods to Mahesh at the list price of 1,80,000 less 10% trade discount. Out of that amount due, 50% is received. So out of which two-thirds is received by check and the balance is received in cash, and central GST and state GST is applicable at the rate of 6% each. First one, they have said that the goods were sold for a list price of 1,80,000. So list price we don't record. We don't record the trade discount. After reducing the trade discount, it is recorded in the books of accounts. So 10% is the trade discount. So first you reduce the trade discount. You can make working notes for this. So 18,000. What is your value of the goods is 1,62,000. Now on this, they are charging 6% central GST and 6% state GST. Okay, that comes to 9,720, and this is also 9,720. Whenever goods are sold, the customer is charged. Always the tax is payable by the customer, ultimate consumer. You understand that? That is why it is called indirect tax, because the customer is paying indirectly to the government. He is not paying directly to the government. He is paying the tax to the seller, and ultimately the seller deposits the tax collected from the customer or consumer. Understand that? So now every seller has to collect the tax. It is, all of you know that what is central GST and state GST and IGST. So within the state, it is central GST and state GST we have to claim. So they have given the rate of 6%. The total comes to 1,81,440. For time saving, I have written the journal in advance. Just I will explain. You will be able to follow it. So 1,81,440 Mahesh account is debited along with the tax amount. Okay. And the sale of goods is 1,62,000, and the output CGST and output SGST. Why it is credited? Because it is a liability for Mr. Dutt, who is selling the goods. Why it is a liability? Because he has to make this payment to the government. Okay. So you understand up to this only. So 9,720 he has booked the GST and claimed from that fellow. And now what they say that out of that 50% is received. Money received for 50%. That is 181,440. 50% is 90,720 is received. But how it is received? Two-thirds of 9720 is received as check. Sorry, 720. Two-thirds of this amount is received as check. So this is deposited into bank. We take it, we assume that it is deposited into bank. That comes to 60,480, and one-third that fellow has paid in cash. So we will be crediting Mahesh account for 90,720. Hope this is clear to you. Second item, what they say that on the second entry, one of the debtors of Mr. X, sorry, one of the debtors, Mr. X has agreed to pay his dues 3000 to C, who is a creditor of Mr. Dutt. Now see here, debtor. X is a debtor to that. X is a debtor for that. Okay. So he is in the debit. So we have to collect money from X. And B means that. C, and money has to be paid to C, Mr. C. So he is a creditor. Now, collecting from this fellow, that is, understand this, collecting from this fellow and then making the payment to C. Instead of that, what he said, because the amount is same, the amount receivable and payable is same. Amount receivable from X is 3000 and amount payable to C is also 3000. And the amount is same, that has asked the X to make the payment directly to C, so that he need not to collect and then send it to C. So now what happened? X's liability is over. So we have to credit X account. And this creditor also, our liability, this is also over. Excess credit, excess liability, sorry, Xinuடைய liability. In Tamil, அவருடைய liability is over by making payment to C. And our that's liability to C is also over because the money is paid by X. Okay. So now what we are going to do, the liability of C is over. So we are debiting C account and crediting X account because the receivable amount has been received indirectly to C. Understand? Now coming to the third entry. Now what they say, that employees have been given inventory having the selling price of 1 lakh. Cost price is 75,000 on the eve of Deepavali as a gift. Please don't make a mistake of salary, because only when you write a salary it is recoverable. Here it is not recoverable from the salary. It is not paid instead of salary. It is a gift. You understand very clearly. It is a gift like charity. When you make charity, what you do? You give it free of cost. Like that, this is given free of cost. Okay. So whenever the amount, it is not a sale, you cannot book anything on the selling price. When it is not a sale, you have to book it in your cost price only. So purchase cost is 75,000, and on that CGST and SGST is applicable. See here, when he would have bought for 75,000, he would have paid the CGST to the seller. Of course, he would have paid the CGST 6% on central CGST, and he would have paid the SGST 6%. Okay, so this was the input CGST. So this, when we purchase, this is booked as input CGST. Input CGST is like an asset, because we are going to use this tax what we paid by collecting it from the customer when the goods are sold. But here, make it very clear, again I am repeating, when you buy the goods, the Mr. Dutt in this case, when he buys the goods, he would have paid the tax. Okay, that is central GST and state GST. So this amount is paid. Ultimately, this will be collected from the customer when he sells the goods. But now what happened? He is not selling the goods. So nobody is going to pay him the tax, because this is given to the employees as free of cost. Employees are also not going to pay the tax because you are going to give it as free of cost. Okay, then it is also a loss to Mr. Dutt. You have to take that total expenses. This tax he has to pay to the government. Clear? That has to pay to the government. So it will be a loss. So it cannot be utilized against output. It cannot be utilized for setting off against output GST. You understand that? So we have to reverse that input CGST and total amount will be debited as an expense. Clear? Okay, hope it's clear. Even if it's not clear, you can leave it in the comment box. I'll try to explain one more time. See here, the purchases account is credited. You all know when there is a charity or a drawing account of the proprietor, the goods when it is withdrawn, not sold, it will be recorded in the cost prices. So purchases account will get credited. This basic journal entry all of you must be knowing. I hope that you know this thing. So purchases account is credited with the cost price. Now what the input CGST and SGST paid at the time of purchase is, we are not going to get it from the customer unless it is sold. Because it is not sold, you are not going to get it from the customer. So this has to be reversed. It cannot be utilized to set off. Understand? So we are going to reverse it. Input CGST 6% on 75,000 comes to 4,500, and the total expenses is the charity or gift to employees. It will be the total expenses for Mr. Dutt. Okay. So now next one is, these are all recording. Next one is a sale of 2,500 made to Kamal Kumar has been debited to Kamala Rani. This is a mistake. Okay. So this is a, we have to do the rectification error. Sale is made to Kamal Kumar. Whenever you make a sales on credit, the person has to be debited. Kamal Kumar has to be debited. What they have done? They have debited Kamala Rani. So do the right entry. Kamal Kumar is to be debited. You debit Kamal Kumar. What was the wrong entry? You reverse it. Kamala Rani was debited, so we have to reverse Kamala Rani account. So it's a very simple one. Okay. No need of further explanation, I hope so. Kamal Kumar is debited to Kamala Rani account. Sale of Kamal Kumar wrongly debited to Kamala Rani, now being rectified. Next one coming to, the next one is, a second hand machinery was purchased and its overhauling charges are paid at 15,000. You all know that whenever we buy a second hand machinery, any repair charges till it is ready for usable stage or put to use, whatever the expenses are happening, that has to be capitalized. So it has to be treated as capital expenditure, nor a revenue expenditure. So you understand what is the difference between capital expenditure and revenue expenditure. So this 15,000 has to be debited to the machinery account. Now what the accountant has done, he has debited the overall charges as simple repair and maintenance account. So this account has to be now reversed. Repair and maintenance was debited. Now we have to reverse repair and maintenance to the credit side. Now one more thing, they say that there was a depreciation on machinery charge, 10%. So if it would have been debited on the machinery account, 10% of 15,000 would have gone to depreciation. I hope you understand. I'll make it in Tamil also. In the machine நீங்க இந்த 15,000 மெஷின்ல நீங்க டெபிட் பண்ணிருந்தீங்கன்னா, ஆல்ரெடி ஃபார் எக்ஸாம்பிள் மெஷினுடைய காஸ்ட் வந்து 50,000 வச்சுக்குவோம். அப்போ இந்த 15,000 நீங்க போட்டு 65,000 மெஷினரி அக்கௌண்ட்டை டெபிட் பண்ணியிருந்தீங்கன்னா, 10% ஆஃப் 65,000 would have gone as depreciation. சரியா? டெப்ரிசியேஷனாக சார்ஜ் பண்ணியிருப்போம். இப்போ என்ன பண்ணிட்டோம், இது ரிப்பேர் அண்ட் மெயின்டெனன்ஸுக்கு போனதுனால அந்த மெஷினரி இஸ் ஒன்லி டெபிட்டட் வித் 10% ஆஃப் 50,000. இப்போ இந்த 15,000க்கு 10% நம்ம எங்கே கொண்டுட்டு போகணும், டெப்ரிசியேஷனுக்கு கொண்டுட்டு போகணும். ஸோ வி வில் நாட் மேக் அ செப்பரேட் என்ட்ரி. So what we are going to do, we are going to do a combined entry, that second hand machinery account. You do one thing, first you can reverse the repair and maintenance. Take the repair and maintenance account to credit side of 15,000. See here. Okay. So on 15,000, do the depreciation of 10%, 1,500. The balancing amount will go to your machinery account. Hope it's clear to all of you. Okay. Now moving on to the next item. Now coming to the next item. Yeah, purchase of 151 from Mr. X was entered in purchase day book as 15 and posted to X account as 51. See here what happened. They have purchased. This is, let me take it as purchases book. When you purchase something from X, how will you enter in the purchase book? You understand it thoroughly, the concept, then only you'll be able to do this with the accuracy as well as with the speed. Okay, so first for understanding purpose, I am doing it here. What we do, X account we will be writing. You will be writing the name of the vendor, supplier from whom the goods were purchased. So goods purchased for 151. When you were writing 151, you forgot to write the 1. So you wrote as 15. So what happened? Purchases account, the total will come here. What you do under periodical total, you have done it as 15. Let me consider as only one item was purchased during that month and this is posted to purchases account. So it is posted to purchases account debited with 15 rupees. Purchases account debited with 15 rupees. That was one more error. When you post the X account, you have not posted X account with a credit of 15. There, what you do, you have posted to the credit of X account as 51. Okay. So now these balance brought down on the credit side is 51 for X account, and for purchases account on the debit side balance brought down is 15. So now when this goes to your trial balance, what happens? See here. So on the debit side, purchases account will appear as 15. Okay. And X account will appear as 51. Okay. So when you total the trial balance, what happened? Credit side is more with, let me take it as trial balance has also got no other item, only these two items. So credit side it is the total is 51, but whereas the total of debit side is 15. So you are going to operate the suspense account wherever the total is short. So what we are going to do? We do not know what mistake has happened. Only when we tally the trial balance, we have put 36 rupees on the debit side and we tallied the trial balance. But while locating the error for rectification, we found that purchase account was 100 rupees less. Okay. It would have been 151. Sorry. Purchase account was less per 136. See, purchase account was less per 136 and this fellow is less for 100 rupees. Okay. This 36 has gone to your suspense account because you have put 15 rupees. So 36 has gone to. So there was a compensating error of purchase account shortage of this amount and X account shortage of 100. So now we have to rectify this. So now what I am going to do? I am going to take this side. Suspense account I am going to credit. Clear, so that this will get closed. And I am going to debit the purchases account with 136 and credit this fellow with 100 rupees. Okay. So now we will be doing it. Purchases account will be debited with 136 rupees and this X account will be credited with 100 rupees. Because again, one more time I'll explain if you're not following it. See here, already purchases account appearing for 15 rupees, and we have debited 36 rupees with the suspense account. Actually, this total should have been 151. So what is required in purchases account? Only 100 rupees we need for the debit. 115 plus 36. And X account already credited with 51. We didn't do anything on this because we did suspense account here and matched this. So X has to be credited with 100 rupees. So you understand this 100 and this 100. We have to do it and we have to reverse this suspense account, and we have to add this to this purchases account because it is no more a suspense account. So first we are going to add this 136 to purchases account so that this side becomes 151, and this suspense account we have to credit so that it gets closed. Done. So purchases account debit 136 rupees, and X account is credited with 100 rupees, and your suspense account is credited with 36. Suspense account is just we are closing the suspense account. Okay. What was shortage in the purchases account? It was already 15 was that, 136 was shortage. So we have put 136. So plus 15. The suspense account which we operated in the beginning, we have reversed it. Okay. And on the credit side, X account was already 51 appearing. 100 was shortage. So we have credited X account with 100. Hope it's clear now. Okay. Now moving on to the next one. Or has been issued a credit note allowing a rebate of 6,000 rupees as goods supplied to him was found defective. It is a sales return because goods is supplied to him. So it was sold to him was a return. So it's one way of sales return. On that, he is issuing Mr. Dutt is issuing 6,000 rupees a rebate. On that, he would have charged CGST and SGST. That also he has to reverse because that fellow is not going to make you the tax payment because the goods were not sold by that fellow. It was returned to Mr. Dutt. Okay, the supplier. Okay, so now we are going to do that. Sales return account, you can write it, or you can write it a rebate account, debit 6,000 rupees. Now, while booking the sales, Mr. Dutt would have credited the output CGST because at that time he has collected from the customer this 360 to in order to remit to government, but the goods were not sold now, so he has to reverse the output CGST. It is no more his liability. Once he will repair the goods and sell it, then it becomes his liability. So now he has to reverse the central GST and state GST what he booked at the time of selling the goods to that extent of 6,000. Okay, so sales return account is debited and the tax is output GST is reversed. The total amount credited to our account is 6,720 because he need not to pay tax on the goods which were returned by him. Okay. Now coming to the next item. S was also given a credit note of 2,000 rupees for making prompt payment. You have to be very, very careful. If rebate was given, this is given for making prompt payment for outstanding against goods sold to him. Once the goods were sold to him, he has to make some payment. He has made the payment earlier, so he is entitled for a cash discount. This is for making prompt payment. Okay. So this rebate is not for anything else. It is for making prompt payment. So if rebate was on account of other reasons such as prompt payment, GST would not be reversed. Make it very, very clear. There is no GST to be reversed on that. Okay. Only when the goods are returned or damaged or destroyed or not according to standards, then we are going to reverse this GST. In case of making prompt payment or for any other reasons, such as prompt payment, etc., GST would not be reversed. Clear? So simply discount allowed. Discount allowed account debit to yes account will be credited. Now the next item is telephone charges and accrual of telephone charges. Accrual of telephone charges means outstanding of telephone charges has been completely omitted. While preparing the trial balance, they have omitted the accrual of telephone charges. Now we have to record because he is telling that either you record or rectify it. Okay, we are going to record this omitted, complete omission, error of complete omission. So now we are going to do the rectification. Okay, so now telephone charges account debit to telephone charges outstanding account, which was omitted, now being rectified. Now coming to the last one is a check of 25,390 issued to Mr. Das, shown under trade payable. He is a creditor. Check is issued to a creditor but wrongly debited to purchases account. Okay, it is also a rectification which was wrongly done. Purchases account was debited. Now credit the purchases account, do the correct entry. So what is the correct entry? We have made payment to C account. C account has to be debited, or you debit trade payable account as you wish. Okay. So it's also a simple entry, either trade payable account, you can write it in the bracket, C DAS account debit to purchases account. Okay, hope it's clear. I hope so. And if you like my videos, don't forget to give a thumbs up and share with your friends who are all interested in these type of videos, and keep watching and keep learning. All the best for all of you. Thank you for watching.